The United States government entered a shutdown in late October 2025.
Government shutdown.
Government shutdown.
Government shutdown.
Government shutdown.
Furloughing federal workers and straining essential services. Amid this domestic crisis, the Trump administration unveiled a $20 billion rescue package for Argentina, with another $20 billion potentially following. This $40 billion commitment to a foreign nation presented a stark contradiction, leaving American taxpayers to question the America First mandate as financial risk was transferred onto their shoulders. American farmers, a core Trump constituency, reacted with swift disbelief and anger. They were watching their own government bail out their direct competitor, enabling Argentine farmers to undercut them in global markets.
It's at risk. It shouldn't be.
Do you agree that bailing out Argentina while our own farmers are struggling is a betrayal of the American soybean farmer?
The mechanism used, the Exchange Stabilization Fund, required no congressional approval, committing billions in secret without public debate or democratic oversight. To understand the bailout, one must examine Javier Milei, Argentina's chainsaw-wielding anarcho-capitalist president, elected in December 2023 amid hyperinflation and widespread poverty. He governed with brutal austerity throughout 2024, slashing public workforces and closing ministries. Wall Street adored his approach, with American hedge funds pouring billions into Argentine bonds, betting heavily on his success. Milei's fundamental challenge was that no one trusted the Argentine peso. His early 2024 crawling peg policy temporarily cooled inflation, but it was a superficial fix. By mid-2025, public protests erupted over spending cuts, and corruption accusations hit his inner circle. The political earthquake came in early September 2025, when his party lost critical elections, triggering investor panic. A classic doom loop ensued. Investors dumped pesos, and the central bank burned through its dollar reserves trying to defend the currency. The spiral accelerated into a freefall, with the peso crashing to nearly 1,500 to the dollar and reserves dwindling to less than $1 billion. Milei's entire economic experiment was on the verge of total collapse. Then, the US government stepped in with a potential $20 billion lifeline in late September 2025, stabilizing markets overnight. This was not a reward for success, but an emergency intervention for a failing project. A project in which powerful American interests had enormous financial stakes. The Trump administration offered ideological alliance as its first justification, with Trump calling Milei MAGA all the way. They framed it as supporting a fellow revolutionary against socialism, a simple story of shared values. Yet, this raised the question of whether ideology was worth $40 billion during a government shutdown. The second reason was geopolitical, countering China's influence. Treasury Secretary Scott Bessent argued that the bailout would pull Argentina from Beijing's economic orbit, using financial muscle to protect strategic interests in America's hemisphere. It was portrayed as a necessary chess move in the great power competition. The third justification was defending the dollar's global reserve status. The administration claimed that propping up Argentina with dollars demonstrated American financial reliability, signaling that the dollar system remained the safest option against alternatives like a gold-backed digital yuan. Trump made the support explicitly conditional on Milei winning the 2027 election, framing it as a transactional deal for political alignment. This contrasted sharply with the benign neglect of previous administrations, but the official story was riddled with contradictions that critics quickly identified. Why bail out a nation that still owes the IMF $41 billion from a previous default? Why use massive state intervention to save a leader who campaigned against bailouts? The suspicious timing, during a shutdown and bypassing the IMF, suggested the justifications were a smokescreen. Following the money leads directly to Wall Street. Hedge funds like Discovery Capital Management, Soros Fund Management and PIMCO had bought Argentine bonds for pennies on the dollar in 2024, betting on Milei's success. By mid-2025, this gamble was turning catastrophic, with bond values plummeting over 30%. The US government's intervention in late September 2025 stabilized the markets just in time to protect these threatened Wall Street investments from total wipeout. The timing was perfect for the hedge funds, raising questions of coincidence versus coordination. A key figure is Treasury Secretary Scott Bessent, a legendary macro hedge fund investor and former protege of George Soros. His professional history is deeply intertwined with Rob Citron of Discovery Capital, who reportedly convinced him to bet against the Japanese yen, a trade that generated a significant part of Bessent's personal fortune. Investigative reporting from late September 2025 revealed that Rob Citron was in close and frequent contact with Bessent, lobbying him to intervene. The argument was that a complete Argentine crash would destroy Wall Street investments and doom Milei, linking the ideological project to the financial positions of Bessent's associates. Even more damning, financial disclosures showed Discovery Capital bought more Argentine bonds in early September, just weeks before the bailout announcement. This suggested possible advance knowledge of government intervention, a circumstance striking for its resemblance to insider trading. The bailout mechanism itself was controversial. The Exchange Stabilization Fund, created in 1934, operates entirely at the Treasury Secretary's discretion, allowing Bessent to commit $20 billion without a single congressional vote or public hearing. Officials called it a currency swap, not a gift, but the reality was far riskier. The US was now holding a melting ice cube, a hyper-inflating peso. If Argentina's economy continued to deteriorate, American taxpayers would be left with near-worthless pesos while Argentina kept the dollars. The scheme extended to a second $20 billion from private investors, who were only willing to lend because the US government's participation provided an implicit guarantee. This created a heads I win, tails you lose structure, where private creditors were protected by a public cushion. This is the ultimate embodiment of privatizing gains and socializing losses. If Argentina succeeded, hedge funds would reap returns of hundreds of %. If it failed, US taxpayers would absorb the initial losses, protecting the wealthy from the consequences of their risky bets. The consequences were immediate for American farmers. On the same day the bailout was announced, Milei suspended export taxes on Argentine grains. Combined with the financial lifeline, this made Argentine products instantly more competitive, leading China to buy millions of metric tons of soybeans from Argentina instead of the US in early October 2025. American cattle ranchers sounded alarms about cheaper Argentine beef imports, warning it would further decimate their industry. Many are family businesses in struggling rural communities, now becoming collateral damage in a financial game played by urban elites. The $40 billion had a severe domestic opportunity cost. That sum nearly equaled the total cuts made to Medicare in the 2025 federal budget, or the funding for SNAP food stamps. It could have fully funded affordable student loan plans or renewable energy tax credits, but instead it was used to prop up a foreign currency and secure billionaire investments. The trade-off sent a brutal message. When billionaires face losses, the government mobilizes tens of billions within days without debate. When working families face hardship, they are told there is no money and austerity is necessary. The bailout sets a dangerous precedent of moral hazard, signaling to hedge funds worldwide that they can take colossal risks, knowing the US government might rescue them. This corrupts market incentives and encourages even more reckless speculation. It undermines capitalism's core principle that risk and reward are linked, replacing market discipline with cronyism. The system now has two sets of rules. The wealthy get bailouts, while everyone else gets austerity, and lectures on personal responsibility. Politically, the bailout backfired. In Argentina, over 60% of citizens viewed Trump unfavorably, and the overt US support was seen as blatant interference, fueling nationalist movements that called Milei an American puppet. In the US, the bailout alienated farmers, fiscal conservatives, and economic nationalists simultaneously, creating a rare unified opposition that revealed deep political vulnerability for the administration. Ultimately, the bailout is a symptom of deeper structural rot, demonstrating how state power can be leveraged to serve concentrated private wealth. The language of national security and ideological solidarity effectively veiled a transaction to protect elite financial interests. The final truth is that the $40 billion wasn't really about saving Argentina, defending the dollar, or countering China. It was about protecting the financial positions of a small number of wealthy individuals who made bad bets, using state resources to ensure they avoided consequences, while American farmers, workers, and taxpayers paid the price. This bailout is a fundamental test of whom American democracy ultimately serves.